The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, as we closed out Thursday's trading session, we did end up with moderate gains in soybeans, plenty of volatility there on the back of the U.S.-China headlines, mostly slightly lower in corn and wheat, mixed action in cattle and hog trade. Let's take a look at Thursday's session and get some thoughts and perspective on the market trade from Brian Doherty, Senior Market Advisor with Total Farm Marketing. Brian, good to talk with you again this week here on the show. And kind of a mixed day outside of the soybeans on Thursday, of course, with all the U.S.-China headlines and more floating around the last several days. It's been a interesting trade to watch, no doubt. But here we are Thursday getting some details on what we're going to be getting potentially for Chinese soybean purchases. And that seemed to give us a little strength there on the day.
Yeah, one of the more volatile days in recent memory, probably the most volatile this year. I didn't measure the actual range today, Jesse, versus other days this year. But as an example, January soybeans had a high 11.14 and a half and a low of 10.70 and a half. That's 44 cents. That's a lot of range in soybeans, something we're not used to seeing over the last several months, let alone maybe the last 2 years. Almost feels like things are kind of getting back to more normal because these 5-cent ranges are getting pretty old when farmers are looking for something better. So the good volatility today, good range, new contract highs scored for the year, good push into the upside on expectations that I'm going to use the framework of a deal. I'm not sure if it's signed yet as we record this. I think there's been a lot of spinning plates in the marketplace today, trying to grab the right plate with the right news or the right headline. But a really nice day in the front month futures and beans. We saw a sale this week to China. This will likely help spur more sales. What I really don't know at this stage of the game now is the urgency or immediacy to the purchases that will occur.
Mm-hmm.
We've heard that 12 million metric tons this year. Well, what does that actually mean? This marketing year or this calendar year? I'm not sure that was clear, unless I missed something. Nonetheless, it's good news. Market into new highs. Corn failed to follow through. I think farmer selling picked up a little bit there. There wasn't a whole lot new in the corn market to talk about. Wheat had a nice morning, kind of faltered. Looked like traders were willing to buy soybean, sell corn, buy soybean, sell wheat later in the session, and that kept pressure on the deferred months in not only beans, but where they sold the new crop beans, but on a little bit on corn, a little bit on wheat.
I wonder about this thought here. I've had this conversation with a few folks. I've seen a few other traders make mention of this on social media and more. Soybeans, traditionally don't love the $11 mark is kind of the narrative I've heard put out there. And I wonder if, with us getting to this mark now and pricing in a lot of this U.S.-China news until we get more details, I just wonder if, producers need to think about taking advantage of the rally here just because of the fact that beans traditionally don't love $11.
There's a little bit of history to back that up, that they either, slide under $11 or they run right through it. And so there's a couple of theories that I'll put in front of you right now. So if you look at the sideways trading range that has been really the case for beans for 6 months or more, that's about $1 range. And there's a technical objective when you run sideways for a while. It's called swing and band. It's like putting hinges on that range on the top or bottom side. You take that band and you just flip it up, right? Very simple in nature, but that's $12 beans. So on the one hand, we're really starting to see some strong acceleration price, some factoring this in. So $12, it takes forever to get to 11, but maybe not a lot of time to get from 11 to 12, right? That's the acceleration phase. That's where serious short covering occurs, and there's a fundamental shift or change, which maybe today echoed that. But usually to extend a rally, you need something else with it. And that would have to be maybe South American weather or something that just adds a little more fuel to this fire, really creates fresh buying where people to really need to run this thing higher, and to do so, have confidence in buying at a higher level. So, with that being said, I'm good with the idea that the bean market may be maxing right now, and if farmers want to sell. But what I'm encouraging is a balanced approach, where if you are selling, be somewhat seamless. Retain the ownership with some kind of a fixed risk option or option spread. This could be the start of something big, or this could be the rally to reward. I don't know how you cannot not make some cash sales into this.
On the corn side, you mentioned maybe some farmers selling there. Amid the bean rally we've seen, I've made this comment: corn kind of a reluctant follower. It seems like the last several sessions. We're getting a little bit of a price bump here in futures, and some basis improvements and things of that nature in the complex. But your thoughts in corn here? I just wonder, you know, is corn going to continue to be a reluctant follower here for the time being?
It is, because we feel that in general the corn yield variability isn't necessarily as high as it'll be for beans. So
Mhm.
when you look at the percentage changes of what it means to go from maybe 53 and a half bushels an acre, if we're dropped down to 51, let's say, or 52, you got to drop some pretty hefty numbers on the corn. That being said, I just think farmers in general, we talk about these percentage changes. Corn rallied over 10% and change in value. That's, for some reason, that just seems to be a point where people start to make some decisions. So I think there were some sales in there. What farmers are reminded of the last 2 years is that these every rally that's come is gone. It's just a fact, right? So it- sell into the rally. So I think you're getting some farmers selling there. But as far as new news, so we got the framework of a trade deal. But if I said, hey, what's the new news in corn today? There really isn't new news. So a lot of times you got to feed the bull. So I think that might be one of corn's dilemmas right now. Is it may have a firm undertone and good exports and good export inspections, but we don't really see commitment of traders, so to know where the money flow is. We're not seeing what the crop progress is, even though we all know it's wrapping up harvest. And we don't have a USDA report. So for those reasons, it seems like the market right now, it's buying the dips, but it doesn't really want to buy the strength. It filled a gap this week, an important technical point, but it didn't like just punch right on through that. And maybe that's tomorrow, or maybe that's not to be. My advice would be the same there. If you're on the fence, and you've got a 10% recovery from what we term the harvest low, then we need to think about what that looks like to make a sale.
When you look at the wheat complex, I felt that wheat's maybe kind of been caught between beans and corn here the last several sessions. Taking a look across all three varieties, though: Chicago, KC, Minneapolis, and we were a little bit lower Thursday. What stands out to you when you take a look at this wheat trade as a whole here nearing the end of the month, Brian?
We tend a really nice technical picture, right? And so we look at that. But there again, I'm going to refer back to would somebody tell me what's new in wheat.
Yeah.
If I were to wake up today and go, gosh, I'm going to buy wheat because, well, there's not really a because right now. I can look at the chart and say, well, we got this really nice bullish key reversal, rallied up, set back a little, rallied up again today. Now set back here, not a great close. But I don't have any new news. If you look at Australia, you look at elsewhere in the world, really isn't any crop worry conditions right now. Reading the headlines this morning: rain in the U.S., rain in Australia, rain in Europe. I think it was just rain in the wheat country. So that wasn't friendly, and that may have been as much as any reason why the market was a little bit softer today. There's just not a lot there. I'd like to think wheat is such a great value, all of these commodities to the world, but there still has to be a sense of urgency, or a pain, or a concern about pain, to really get the market geared up. And we're just not at the right time of the year where we generally see that happen. Hopefully, the framework of this trade deal and other trade deals that the administration is working on will really just lead to solid exports. So, exports are always the swing vote. Expectations too, Jesse, that interest rates yet have some room to work lower, could help provide support if the dollar follows that down as well. But again, there isn't really anything new in the wheat that I could point to and say, wow, this news this week was really something different. They're
Well,
just they're kind of lacking. Yeah.
yeah, yeah, kind of lacking, and that's outside of the soybean news. That's kind of something I'm agreeing with you, Brian. Is that there's just not a lot of fresh news out there right now.
I wish I could tell you more. It's that time of year too where we don't get a lot necessarily, but it's the markets, and I always say marketing doesn't take a day off. Things move sometimes when least expected. So preparation, keeping in front of the market, looking at these opportunities, and it goes back to like corn. We talked about corn. Well, it kind of hit a level here. Now what, right? So
Mhm.
let's run the math, run the pencil, see how comfortable you feel, and if you are, what one thing I want to highlight is these markets have great potential, but potential can be overrated, and you still got to kind of be in the trench of taking what the market gives and managing that. And we've had the market give us some opportunities here in corn and beans in particular.
We're having a conversation today with Brian Doherty, Senior Market Advisor with Total Farm Marketing. Let's go to livestock trade, cattle, kind of a mixed futures day Thursday. I know there's been immense volatility. We've had expanded limits taken advantage of many days. A lot of frustration amongst cattle ranchers right now as we near the end of the month. What's your read on the cattle trade? I wonder, are we maybe, nearing the end of some of the volatility? Have we flushed out some of the fund money in this market? Things like that. I mean, what's your take on this cattle complex to close out the week?
Well, certainly when you had the kind of movement and price ranges and volatility, it grabs attention quickly. And on the other hand, let me put things into some perspective. So I'm going to first focus on the nearby October live cattle contract, closed today at 235.27. Jesse, that market was at 235.27 on August 20th. We're 2 months removed, and the market's at the same price. Now, it was higher and it was lower, but I think we may have talked on this last week. If you sort of smooth that out, this market is beginning to level off. The moving averages are beginning to level off, like the 50-day. Think about an average price for 50 days, almost flat line right now, where before trending upward. So when you start to see that environment, traders notice that too, and they'll run their sell stops under moving averages under key areas. And this week, I think we had just in the end of last week, we just had a lot of technical selling. Once these key support areas, gosh, you got to go back to April before there were any decisive closes below the 40 and 50-day moving average. There were some probes around it. And even in April, went through it for a few days, but only by a few dollars and came right back above. And then you go all the way back into last year. So you've had this really long-term uptrend, and so as your market sort of, what you did, make an acceleration, you could have call it an acceleration toward the top. You start to see some changes there. So when I look at these markets, it's like, we're really starting to see some leveling off. And is that consumers starting to back away from the market? Is it increased supply or what? I don't think it's increased supply. We can see that on the numbers. But the cutout value has really peaked about 35, well, maybe it's 40 to 50 days ago. Now they were up some yesterday, but they were down today. So it looks to me like the product market is maturing and leveling off. The board picked up volatility. Prices are still really high historically. But now it looks like actually the board is underneath cash. And we had a point there where the board was leading cash.
Feeders, of course, was where we've had a lot more volatility than the live cattle trade with the expanded limits, a couple days in a row there. And I know that's something that a lot of folks are paying attention to is now where does the feeder cattle market settle itself out here, so to speak, Brian?
Yeah, good question. It left some gaps on the chart. So when you look at chart theory, what it basically means if you have a trend one direction and then all of a sudden you leave a gap. So here we left a gap on the way down. Well, what is a gap? Well, gap is where the market low one day trades or the next day it opens up and continue to trade below that low, so it leaves a space. It's just a real obvious point on a chart. It's called a gap. In gap theory, there's a couple gap theories. You'll leave three gaps. One is what they call a breakaway gap. That's the first gap that we had with the high end, then a measuring gap, then an exhaustion gap. And the exhaustion gap was filled. Market might come back and fill the breakaway or the measuring gap. Now, a lot of technical wording there, but what it tells us is that this market had some type of change in view or trading methodology or something. After a long-term uptrend, market could be arguably overdue for a correction. It corrected. So now the key is, where from here, right? Did the supply of feeders all of a sudden blow up? No, that is unchanged. The rhetoric in the public eye through the administration and elsewhere as well. At some point, the Mexican border is going to open, and at some point, consumers are credit card debt and Christmas and all this. They're going to buy a little less beef. That may all have merit, and it kind of looks like it. But I don't know if I'm necessarily convinced that this is over, as in the tops in, we'll never see that price again. I think this limited supply going into late fall proved for multiple months that it could find buyers. And this is maybe a buying opportunity, but that's a kind of a long shot on my part to think we're going to go to the high because the market has to have momentum. So somehow we'd have to build that momentum. But ultimately, there's no quick fix. A deal with Argentina, lowering tariffs with Brazil, if that happens, none of that is a quick fix to tighter inventory. That's a long-term issue. Expect a lot of volatility, but I think the new norm is probably low side 180 to 200 on cattle, high side 240 to 250.
Dairy markets as we close out the month of October. Any notes for us there, Brian?
Well, same thing. A lot of volatility there. It looks like the markets have bottomed and did so 3 weeks ago, 2 weeks ago, trying to exert the pressure upward due to good product. We're starting to see more inquiry, product movement, product sales, maybe some recovery in the products. But I don't want to kind of behoove anybody here. Uh, there's not an upward momentum bull market at hand, and I think we don't have the numbers because of the government shutdown, but I think you're probably still looking at a general trend, Jesse, where uh, production per month is going to remain the same or higher. So the strength has to come from the demand market. Maybe the world's going to feel better about trade deals. Maybe the world's going to feel better about product at a good value, and maybe these processors will chase. But I don't want to give anybody false hope that in the short term that we've got anything more than a bounce or recovery. In the long term, changing my tone a little bit, I just think that there's somewhere down the road going to be a tighter inventory of heifers. And some of these cows that were held one lactation too long get moved out. Do they continue to hold cows? And it just seems to me that somewhere we're going to run into a little bit of a supply problem with the breeding herd. And ultimately, that's going to be the catalyst to push prices back up into the $20 range, maybe by late 26.
Brian, always enjoy the insights. Anything else you would add or reiterate to folks here on the show today?
I think right now I'd just like to just remind them that the cattle market is a prime example of how quickly things can change. And all of a sudden, look at beans; things have changed quite a bit. So the volatility is moving back into the marketplace, likely money flow. So keep a sharp pencil and work toward what I'd call a marketing balance, a balanced approach to when you make decisions. Think about how you want to do that incrementally, or do you swing a heavy bat? If so, do you get lopsided? Do you need to use paper products? Really push the pencil and have good, meaningful conversations with your advisor.
Well, I know if folks want to have a conversation with you and get some advice there at Total Farm Marketing, a phone call, an email, a lot of ways to get in touch. How could folks reach you, Brian?
They can reach us through the easiest way is a phone call, 800-334-9779. So that would be my preferred methodology. And anything beyond that would probably likely come from emails. A good source to get a hold of Brian with a Y, Brian at totalfarmmarketing.com. Check out our website. But I really like that phone conversation. I can hear things a lot more in the voice and in the question.
Brian Doherty with Total Farm Marketing. Always a pleasure, sir. Thanks for joining us. Have a great weekend. We will talk to you next week.
Jesse, thank you very much. Appreciate the opportunity.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.